All right, so global oil prices. They're really making headlines right now. It seems like every time you turn around, they're dropping again. This is actually the third day in a row.
Yeah.
And it's not just a little blip. This is a pretty steep decline.
Yeah, and it's interesting, right? There's a confluence of factors kind of all happening at the same time. It makes you wonder, what's going on here? Is this just a temporary thing, or, is something more fundamental shifting?
And I think that's what we're all trying to figure out. We've got Saudi Arabia making some really big moves.
Yeah.
I mean, we're talking the largest price cuts they've made in over 2 years.
Those are some huge cuts, really significant coming from them.
And then on top of that, you've got all this talk about escalating trade wars.
Right. And specifically, it seems like the U.S. and China are kind of at the center of that.
Yeah, and the tariffs they're slapping on each other, starting to have an impact.
It's definitely making people nervous, and I think it's really making businesses cautious. If you're a company and you're facing all these unpredictable costs and, trade relationships are all over the place, you're going to think twice before, expanding or investing.
Makes sense. Less confidence in the future means less demand.
Mm-hmm.
And that brings us to oil, one of the most essential commodities.
Absolutely. When the economy slows down, demand for energy often dips too. And then you throw in the OPEC Plus announcement. That really shook things up, didn't it?
OPEC Plus energy.
Yeah, that was a surprise.
Big time. Most people were expecting them to stick with their current production cuts, maybe even just keep things as they were. But no, they decided to ramp up production significantly.
Which seems kind of counterintuitive, right, when prices are already falling. So what we're talking about here is Brent Crude, the international benchmark. It's down almost 4% to $63.01 a barrel.
Yeah, not a small drop.
And West Texas Intermediate, which is what we use here in the U.S., that's down to almost $60 a barrel. It's a big deal. And I think the timing of the Saudi Aramco announcement was really interesting, too. Like, right after that OPEC Plus news, they come out and say they're slashing the price of Arab light crude for their Asian customers for May delivery. It's almost like they were saying, hey, we're serious about this,
Like doubling down on the price drop. No wonder people are talking about a tsunami of sales. It feels like a bit of a panic, doesn't it?
It does. It's like everybody's hitting the sell button at the same time, worried about oversupply.
Especially with that increased production from OPEC plus hell. I mean, where is all that oil going to go?
Right. If demand is shaky and supply is going up, that's a recipe for even lower prices. And we're seeing that play out in the futures market too, right? That whole Contango situation.
Contango, yeah. So for people who aren't familiar with that term, can you kind of break it down for us?
Sure. Basically, Contango means that oil contracts for delivery in the near future are cheaper than contracts for delivery further out, like a year or two from now. And that usually means traders think prices are going to be lower in the short term.
Because there's too much oil sloshing around right now.
Got it.
Got it. But it's not just oil, is it? It seems like this whole thing is kind of bleeding into other parts of the economy, too.
Totally. I mean, we're seeing iron ore prices dip. Other industrial commodities are taking a ham. Even securities are down.
Like a domino effect.
Yeah, it all goes back to those tariffs. The U.S. and China are basically in a trade war, and that's making everyone nervous. It's creating this climate of uncertainty, and that's bad for business.
Yeah, people are less willing to take risks when they don't know what's coming next. So it's not just about oil. It's about confidence in the global economy.
Exactly. And the longer this trade war drags on, the worse it's going to get.
All right. So what are the experts saying about all of this? Goldman Sachs, they've actually revised their Brent crude forecast downward twice in the past week.
Wow, twice. That's a big deal. Shows you how fast things are changing.
They're now projecting $62 a barrel by December. That's $4 less than their previous forecast. And it's not just oil. They've also lowered their GDP growth forecasts.
Uh-oh. Sound like they're getting worried about a recession.
Yep, and they're not alone. Morgan Stanley has also cut their Brent forecasts, down $5 a barrel for the rest of 2025 and all of 2026. It's like everyone's bracing for impact.
It's pretty sobering. And then you've got the U.S. president, calling on OPEC Plus to lower prices.
To help with inflation, right? And maybe put some pressure on Russia.
Yeah, it's a complicated situation. He wants lower oil prices to ease things here at home, but at the same time, investors are worried about a recession. And lower oil prices can sometimes be a sign of, a weakening economy.
It's a tricky balancing act. And speaking of things hitting home, gasoline futures in New York are down almost 3%.
Oof, that's going to hurt. People are already feeling the pinch at the pump.
Yeah. It's good news for drivers in the short term, but it's a reminder that This whole situation has real-world consequences.
Absolutely. And it's not just about gas prices either. It's about jobs, it's about our retirement accounts, it's about the entire economy. You know, that tsunami of sales comment, that really stuck with me.
Yeah, it paints a vivid picture.
I think until we see some kind of clear signal from the U.S. president, you know, something to reassure investors that things are under control, we're going to keep seeing this kind of panic.
Like they're waiting for someone to step in and calm the storm. And then, of course, you got those new tariffs that the U.S. just slapped on imports. 10 to 50%, depending on the country.
Those are some big numbers.
With a minimum of 10% going into effect on April 5th, and then even higher tariffs coming on April 9th.
This is a major escalation in the trade war. It's like they're throwing gasoline on the fire.
And the markets are definitely reacting. I mean, Bill Ackman, he's a pretty savvy investor, and he's talking about an economic nuclear winter. That's a pretty scary thought.
It's not something to take lightly. He's basically saying that this trade war could have devastating long-term consequences.
And Jamie Dimon, the CEO of JP Morgan Chase, he's worried too. He thinks these tariffs are going to lead to even higher inflation and slow down the economy even more.
And he's in a position to know. I mean, he runs one of the biggest banks in the world. If he's worried, we should all be worried.
Let's look at the numbers. The S&P 500, it dropped almost 5% on April 3rd, almost 6% on April 4th after China announced their retaliatory tariffs.
Wow, that's huge.
And then another 4 to 5% drop on April 7th. That's the worst three-day stretch for the market since March 2020.
That's saying something. It's like we're reliving the early days of the pandemic all over again.
And remember when there were those rumors about a possible tariff delay? That gave the market a little boost for a while, but then the White House denied it and the market tanked again. It's like they're dangling hope in front of us and it's snatching it away.
And now there's even talk of more tariffs on China, maybe over 100%. It's crazy.
It's like they're trying to see how much they can push things before everything breaks. And it's not just the U.S. markets either, right?
Right. The Russian stock market is taking a hit too. The Moscow Exchange Index is down over 8% since last Thursday. Part of that is because of the trade war, but part of it is also because of, you know, what's happening in Ukraine.
People were hoping for a quick resolution there, but it's not looking so likely now.
Yeah, that's adding to the uncertainty. And as we were talking about earlier, Brent Crude has now dipped below $63 a barrel for the first time in 4 years.
Driven by those worries about the trade war and the increased production from OPEC Plus.
Right. And Goldman Sachs, they've actually revised their long-term forecast for Brent crude in 2026 down to $58 a barrel. So they're not expecting things to get better anytime soon.
And Russian Urals oil is also down, below $53 a barrel, which is a problem for them because their budget for 2025 was based on a price of $60.
Yeah, that's going to put a strain on their finances for sure.
It's a mess. And then you've got copper prices. They're often seen as a bellwether for the global economy, and they just plunged over 7% in Asian trading.
That's a big red flag. Copper is used in so many different industries, so when its price drops that sharply, it's usually a sign that things are slowing down.
Like the canary in the coal mine.
Exactly. And it's not just copper. We're seeing weakness across a lot of different commodities.
But gold is up, right?
A little bit, yeah. It's not a huge jump, but it's interesting. People tend to buy gold when they're nervous, you know? It's seen as a safe haven asset.
Like a hedge against uncertainty.
Right. So that uptick in gold prices is another sign that investors are feeling uneasy.
And the U.S. dollar is also taking a hit. The Bloomberg Dollar Spot Index just had its worst performance since at least 2005. It's down against a basket of other major currencies.
Yeah, the dollar is definitely losing some of its luster. I think part of that is because of these tariffs. Investors are worried about the impact on the U.S. economy.
It makes sense. If they think the U.S. economy is going to weaken, they're less likely to want to hold dollars.
Right. They're looking for safer places to park their money. And we're seeing that with the Swiss franc and the Japanese yen. They're both up against the dollar. Those are classic safe haven currencies.
But the dollar is actually up against the Russian ruble.
Interesting. That's probably because of the falling commodity prices. Russia is a big exporter of oil and other commodities, so when those prices go down, it hurts their economy.
Makes sense. And fear indices are also spiking, both in Russia and the U.S.
No surprise there. Everyone's on edge.
Yeah.
You know, waiting to see what happens next.
Even the cryptocurrency market is getting hammered. Bitcoin is down. Ethereum is down. It's like a global panic.
I guess when the whole world is freaking out, even crypto can't escape.
And then you've got these estimates about the potential cost of these tariffs. Lawrence Summers, the former Treasury Secretary, is talking about $30 trillion.
30 trillion, that's an astronomical number.
And he's comparing this to the market crashes of 1987 and 2008.
Those were some dark times. I hope he's wrong, but he's not someone to ignore either.
And JP Morgan, they've raised their odds of a U.S. recession this year to 60%.
60%, that's a pretty high chance.
It's not looking good. It feels like we're teetering on the edge of something really bad.
Yeah. It's definitely a time to be cautious. We'll have to wait and see how things play out, but it's not looking pretty right now.
Well, we'll keep following this story closely and bring you any updates. In the meantime, stay informed and stay safe out there.
Absolutely. Knowledge is power, especially in times like these.
Subscribe to our podcast on Spotify, Apple Podcasts, and YouTube. We're here to make things clear. New episodes every day.
We'll be back tomorrow to dive deeper into the latest developments.
Thanks for listening.
See you then.
Bye.